Hi, my name is Kenneth Yu, and welcome to Write Your Own Damn Check, the channel that helps you take back your financial destiny through superior marketing, branding, business, and investing. And usually in these sort of videos, I'm usually more dressed up. There's title screens, there's bells and whistles, there's B-rolls and everything. But I think this is such a compelling and such an urgent topic that I'm just going to dive straight into it. And I want to just show you a new investing paradigm and why Wall Street bets will revolutionize the finance industry. And we all hear about Wall Street bets, right? Like the last few days, we're just talking about it and the game of chicken with GameStop and how interesting this whole saga is. It's like almost a Netflix movie that's about to happen. So in this short video presentation, I will basically say how Wall Street bets can play a part in the great wealth transfer that's about to come. Wall Street bets position in the barbell strategy, and it's the barbell strategy of wealth creation. What the hell is Wall Street bets to begin with? Five psychological realities that make Wall Street bets so compelling, and the single biggest factor why Wall Street bets actually change the rules of investing. And And for me, my main specialization is I'm a behavioral marketing specialist. I know neuromarketing just like that. I know how to get people to buy. I understand human behavior really well. And by no means this is financial advice, the usual spiel. I'm not giving you any form of financial advice, what stocks to buy and all those things. I'm just giving you a behavioral perspective and how that affects the financial market because undeniably there's a link. And so what really is interesting for me, my obsession and why I started this channel is because I believe that there's a great wealth transfer coming. Basically from the haves, the top 0.1%, to the rest of us. From the baby boomers to the millennial generation. And even with the whole GameStop episode, we actually see we already see, wealth transferring hands. We already see money going from one hand to another. And we see a lot of success stories, even with those who have taken the GameStop stocks. And for me, this whole channel is to basically bring you the strategies and the understanding of how money works, how wealth creation actually works, and how we, as business owners, as entrepreneurs, as investors, uh, can take a piece of the pie. And so, how WSB, I would call it WSB because Wall Street Bets is just really hard to pronounce with my Asian tongue, is something I call the barbell strategy. And that's for me, like a barbell, there's two sides. One, we have the conservative side, and the other, the speculative side. And so for me, I'm not normally a speculator. I study macro trends, I study the bond markets, I have a successful business. And that's the conservative side. You have your bread and butter, be it your salary, be it your business. You understand macro trends like the weather patterns and how it affects, let's say, agriculture yields and everything. You study the bond markets. You buy gold, you buy silver, and you buy the value stocks. And so in a sense, that's really where I play at most of the time. Having said that, true wealth, and not incremental wealth, but true wealth happens in I will call the speculative side of it, where there are liquidity events. That means once in a lifetime or several times in a lifetime events where you could make a lot of money really, really quickly. And so if you bought crypto, let's say in March, that's one good example. It was $3,000, right? Now it's uh, 30,000. It was up to 42,000. So you literally 10x your money from there. Or you have a business and you cash out your business, you exit your business, or you go IPO, or you become a venture fund, a capitalist who go into Airbnb at an early stage, Google at an early stage, And the other thing that I want to relate Wall Street bets is what we call the meme stocks. And these are stocks that have no inherent value, but are spiking up because of this speculative mania and speculative fervor. And for me, provided, of course, that this is money you can afford to lose, and this is your game money, this is your money that you otherwise spend on video games, etc. Uh, it is an interesting attempt at a liquidity event. So that means, if you bought GameStop at $4, it hit like 400 yesterday or something. So you literally 100x your income. And those opportunities don't come every day. So what is Wall Street Bets? Fundamentally, I won't go so much into it. There's videos everywhere. Wall Street Bets is a subreddit group of people who just put their wildest investment bets on the forum. But now it becomes almost a rallying cry of different people encouraging one another, almost like cheerleaders for certain stocks. And that is a very interesting psychological phenomenon that I'm exploring here. So, and the differentiation that I want to make is that the Wall Street bets crowd isn't just standard speculation. It isn't just your tulips from Holland or your tech stocks from 2000s and all those things. There is something really special that's happening and very significant that's happening, and you can make a call whether you want to be part of that or not, or whether it can be part of your barbell strategy. And the lenses that I'm going into, what I'm seeing is that it's psychological and not financial. So I'm not looking at fundamentals here. There are certain times where fundamentals are important. If you're doing your forex, you're doing your macro investing, etc. But from a pure psychological lens and how it relates to different buying behaviors, uh, I think this is actually really fascinating. And again, it helps you to make a decision whether you want to be part of that mania, or you want to observe from a distance, or you want to avoid it at all costs. And so, really, there are 5 reasons fueling Wall Street bets: the movement, the prices, and all those things. And they're all really interesting psychological reasons. So, number one, we have the fourth turning. The fourth turning. This is a book that has been introduced to me last year. It's written by Neil Howe, and it's a book that's followed, get this, by missionaries, by the investment community. I'm talking about the hedge fund actually community, and Steve Bannon, who was Donald Trump's chief of staff. So you have 3 separate groups of people that are recommending the same book. So what is the book about? It is basically about 4 different turnings. I won't go into what those turnings are, but essentially the fourth turning is a battle between the young and the old, between the different generations. So there is now a conflict between the different generations. So when you say, okay, boomer, that's in a sense a war cry. It's a sign of antagonism towards a certain demographic. And the baby boomers have caused a lot of misery in the States, that they bail out the Wall Street guys 10 years ago. It's really the rich getting richer, the poor getting poorer, and really a lot of the millennials and the Gen Zs are paying the price because they were in uni during the last crisis, and during COVID, they hit another crisis. And when you're saddled with like student loans and everything, there's not a lot of trust for the establishment. And so what happens is Wall Street bets have a very convenient scapegoat and a very convenient enemy. Not right or wrong, but really the enemy is Wall Street, the Wall Street fat cats, and how they make money so easily, how they're gaming the system. Even now, even though we in a sense, Wall Street bets are using the exact same system that the hedge funds and the short sellers have been using for years. They now want to clamp down certain things, and there are even blackouts right now and everything. So there is a culture war that is happening right now. And whatever's happening in Wall Street bets is an expression of that anger, which actually brings me to the second point, that is about the revenge. Because what's really interesting when I read Wall Street Bets, when I read the post, is that a lot of it isn't about the money anymore. Because if you're coming GameStop right now at this time of recording, it's actually really high. You may 3x it, may, but it's, as compared to, at 4 and 5, there's not a lot of gains. But it seems that a lot of people are actually buying the stock out of principle because they want to stick it to the man. They want to show the hedge funds who's boss. They want to repay them for the years of suffering they have encountered. Because look, thanks to the last great financial recession, there's a new group of homeless people. There's groups of people who are just disenfranchised, and some of your parents may even have lost homes. And so there's this object of revenge that, hey, now I can cause a few billionaires a lot of harm. And in fact, you're not just causing a lot of harm. For the Wall Street bad guys, you may cause a market crash. It might wipe out a lot of the hedge funds simply because of how they are set up and how they take advantage of the system for so long. And there's this deep satisfaction, whereas it's not correct. Like really, it divides the world even more. But that's the psychological reason behind that. And you couple that, like, this is part of my values, but you have the ability to make money as well. Like talking about the desperation, because there was a Reddit post that talked about how they survive on food stamps. They were eating ramen every day. They were putting $5 because that's all they have for gas in the car. So the whole idea of a generation being broke and a generation that's underwater because of the college loans and all those things, it is desperate times. It is very lean times. And it doesn't help that Congress took a million years to pass a stimulus bill just to hand you $600. So there is a desperation. That means there's an element of the value system, like, hey, this is the enemy. I'm taking revenge against this enemy, and this is my way of fighting back. But if I can make money from it, why not? So that could be a combination of reasons. That could be your sole reason that, hey, with the $1,000 I put here, I might make $3,000 or $5,000 back, which is what I see. Like people are putting in their rental money and all those things, which I don't encourage. And some putting their grandmother's life savings and everything, and not something I will encourage. But when you're really desperate and there's no other outlet because there's no jobs anyway, and there's still shutdowns anyway, there is really, in a sense, no avenues for that. And then 4 is the cheat code. And I think with Wall Street Bets, it's also the gamer generation. And that is the generation that wants things instantly, and that there is a system that we can game, and we can do a loop, we can exploit the loopholes. And we have the speed runs that are so popular on Twitch, where people complete games in a very quick sequence, and so we want the quickest, fastest thing. And when everybody is talking about a certain stock, that stock goes up, so it replaces the research, it replaces the in a sense the due diligence that you need to do, although there is due diligence actually, because what's really interesting is, while you have that cheat code and a gamer's mindset, I actually look at Wall Street Bets as more of a gamer community than an investor community. But having said that, the counterpoint to this is the Hive Mind has a lot of wisdom. You have really, really sharp analysis within Wall Street Bets. It's not just people YOLOing, even though there's a lot of them, but they're really, really sharp options traders that are on the group itself. In fact, it was Shamaf, who's now every Wall Street's Bets newest hero, basically said that they do analysis far better than some of the hedge fund guys. And when you have the Hive Mind, that wisdom that comes together, it sometimes outperforms the few brilliant minds that you have. So I'm part of another investment community, and they did a really interesting experiment where the Hive Mind came up with a hypothetical fund across a diversified portfolio, and they compare it and benchmark against the experts in that community, and the Hive Mind actually won and outperformed by about 20%. So I thought that was quite remarkable. But what happens is when you combine the Hive Mind, that means the wisdom of the diligence done by deep fucking value, the Wall Street bet hero who went from 55,000 to 11 million, and he was talking about how GameStop had this 160% short interest for the last 1 year and everything. But when you combine that fact that there is this systemic issue that can actually drive prices higher, and when you combine it with this bonus reason, I call it, so this reason number 6, and that is the network effect. And that is, you have the wisdom and the analysis and the research. But the issue is when you have analysis and research, and you have maybe 100 people looking at that research and buying your stocks and shares, it's still not enough to move the needle. It's still not enough because it's only 100 people. But when you have something like Wallstreetbets, which is at current point at 4 million people, then damage can be done. And what's really interesting is, unlike a lot of investment groups, this particular investment group or gamers group or whatever it is on Reddit. And it takes advantage of something called the network effect. And the network effect is basically this. When you have 2 million monkeys running around, they don't cause a lot of damage. And one of them may fling poop in a certain direction. It doesn't cause a lot of damage. But when they all fling poop in the same direction at the same time, and of now the 2 million has become 4 million, when this quote was just yesterday, I think, you will cause a lot of damage. And then there's the word of mouth component, because the more you promote, or the more you encourage a certain stock, as the stock goes up, other people come alongside you. It's actually almost like an MLM, a multi-level marketing, without a lot of the boundaries that MLM have. And in a sense, Reddit has more in common with Facebook than a fund. So what's happening is what we call Madclavs Law, which is there is an inherent network viral effect for certain platforms. And then that creates even more value and even more results. And it's just this exponential thing, which is what's happening now with Wallstreetbets. Like a whole bunch of Indian traders on it, and they have nearly 2 billion people, right? And a chunk of them are also now at home board. So you have all these Indian millennial traders that have come on board, and they bought GameStop. GameStop is like one of the top 5 stocks in India yesterday. And that's just the word of mouth at work, and it's just pushing the stock higher and higher. I mean, crypto follows Madclavs Law to a T. So crypto is actually more like Bitcoin, Ethereum has more in common with social media than they do with other stores of value. And so this is really fascinating just to see that. And what transpires is that there is a self-fulfilling prophecy. Like when you say something goes up, it's actually going up because 4 million monkeys are throwing poop in the same direction. and And so that's actually how the investment community has worked out this well. Like, it's not about valuations in the equity space, right? Like, you look at CNBC and Jim Cramer is shouting about buying this stock or buying that stock. It's no different from what Wallstreetbets are doing. The only difference is because it's on Reddit and because of all this emotion that's there, like the disenfranchisement, the fourth turning, and all those things. That's why it's creating a very interesting event in the financial markets today. But beware, and And this may or may not happen, but the bear awaits with fangs. Why? Because Wall Street is now threatened. The establishment is now threatened. And so they will do what they can to shut down the retail. It's just how human beings work. Power always wants power. They don't want to cede power. They don't want to lose power. And sometimes it's just about ego as well. Like you had a good reputation all this while, and now you're getting bamboozled by a bunch of seemingly ignorant retail investors. So they're trying to pull the strings. I don't know what the SEC will do next, and all those things. But that's something, a counterpoint. Like you want to risk manage, right? So if you're doing any form of these sort of meme stocks, you need to just risk manage and say, okay, what's the downside? And of course, there's the obvious downside. Everyone pulls back, and you're the biggest fool. But I find that a bigger risk before the biggest fool thing can happen is the bears are waiting. They either be it market manipulation or some sort of governmental intervention needs to happen, or they may just crash the market. Like because to cover your shorts, you need to sell your longs to cover your shorts. So there's a very interesting knock-on effect happening in the financial markets now. So buyer beware because of that. So really, my warning is, if you want to do that, consider it. Then use play money. So I myself, I'm playing a bit, but that's really like less than 10% of my investment portfolio. If I lose it, fine. Nothing. It's like basically a steak dinner, a few steak dinners that I sacrifice when I should be eating vegan anyway. So uh, use play money only, and just a small part. But the risk reward ratio is high. Like basically, you could 10x, 20x your stock, 3x or whatever in a very short amount of time. When these things can take multiple years. And so again, if you want to speculate, you actually now have an army. So that's the thing about Wallstreetbets. Like basically, if you have stocks, everybody is encouraging one another to go higher and higher. So there is the element of the self-reinforcement prophecy at play. But fundamentally, remember it's all about the game. It's being a gamer and not an investor in this sequence. Don't bet your last dime. Don't bet your father's inheritance. All those things. It's really just play money. It's what you invest to buy a VR set on a PS5 or playing League of Legends or something and buying a new armor for World of Warcraft or something. I put it in that regard. It's just that if you win this game, the rewards go beyond high scores on the screen and into your bank account. That's all. So that's it from me, and those are basically the 6 reasons why you should look at Wallstreetbets and consider it as either something to view or something to participate or to avoid. But it just gives you all the different factors involved and why it's just such and such an interesting phenomenon. And so, if you want more of these sort of musings and this sort of thinking, because like I'm gifted with the art of making money in just several different areas. I've made a lot of money for myself and my clients. I want to share some of those secrets with you and to help you reclaim your financial destiny through superior business marketing and investing. And so we have a weekly newsletter that come out. It's called WYODC Confidential. WYODC stands for Write Your Own Damn Check. Cool, right? Write Your Own Damn Check. So go to WYODC.com, like, subscribe, and if there are more videos like this and the crowdsourced wisdom of my community, which I have a lot, big group, big movement right now, then join me today. Hope you like and subscribe, comment, agree, disagree. Yeah, I am looking forward to it. And to you, Wall Street pros out there, uh, Godspeed. And rocket, 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 stonks.